Hey guys, so today I just wanted to make a very quick video. I was almost thinking I wouldn't make a video today, but let's just cover a few things that I noticed in the market. So with Apple, if you watched my video yesterday, I was talking about this. When a FANG stock breaks underneath the 200-day, it generally likes to come back in a retest. And you can see that Apple today actually closed above the 200-day moving average. So the 200-day moving average, we're going to see right here, it's 153.89. Apple closed above that today. But we're going to see right here that Apple is still following this downtrend. And we're right on the cusp. And when I zoom in, we're going to go to the 1 month chart. And let me point something out right here. So basically, we filled this right here. So who knows what's going to happen next? I mean, I would have felt more bullish if we broke past this today. And then we retested and we rebounced. That would have made me feel a little bit more bullish. But when I go back to the 1 year and I zoom in, we're basically right here. So on the 8th, we had this down day right there, and we drew that wick. So all we did today was just come right back up to that wick. And now we're at resistance for this shorter term downtrend right here. But you can see when we zoom out, there's this longer term downtrend right here. So, it could be possible that we could just crack this right here and go straight up to the 20-day moving average right around 162.86. So it's very possible that we could retest this broader term trend line right here. But the thing that you have to be really cautious about is that we made that initial close yesterday below the 200-day moving average. So this makes me weary. I'm not necessarily bullish because here on this day when we had this massive green day, you can see we bounced straight off the 200-day. We rallied all the way to the 100-day. But here we didn't have any buyers at the 200-day moving average. It's only now that we're seeing some buying stepping in. And when we actually zoom out and we look at the volume profile, that's the green candle that we printed today. It's not really amazing. And if we look at the volume, the average volume is 95.57 million. And today it was just 92.84 million. So it makes sense that volume isn't too great today. I mean, we have FOMC this week coming in on Wednesday, Thursday. So to me, it wouldn't make sense that a lot of people would be buying or selling. They would want to be waiting until after that event to do a lot of the buying. Also, keep in mind that we're coming into a quarter end. So the third Friday on the last month of a quarter ending, it's called quadruple witching. And this is when a lot of different options contracts expire. So this is when you see a lot of volatility enter the markets, and you see a lot of shares being traded. And it's usually going to be the Thursday and Friday where you see the most price action. So that's Apple for you. Now, when we look at SPY, I'm going to zoom out here. So the one thing I want to note is that it could be possible that we go to the 20-day moving average here at 430 if we get this continued bullishness. But I do think a strong resistance is definitely going to be where this red candle bar is, if you see that. So that could be right around 432, I think will be a pretty strong resistance, which also lines up with the top of this trend channel right here. So when I zoom out, you can see that, the top of that trend channel. So if we move there in the next day or two, the resistance here is going to be 432.32 about. Then you can see that we had the death cross here as well, the 50 crossing underneath the 200. So you could take this with a grain of salt. And the reason why I kind of talk about the death cross in my previous video, which I'll link down below. So a death cross, to me, it has a lot more meaning on the first index that it appears in. So this appeared first in the IWM, and then we saw it in the NASDAQ. So in the NASDAQ, it caused a lot of fear and you saw a lot of selling. And the NASDAQ holds a lot of tech names. And S&P 500 also holds a lot of tech names, but also holds the financials too. So this is just lagging. So I would say that the strongest um, indicator is when we saw the death cross on the IWM, the Russell 2000, and the Nasdaq. And the S&P 500 is just reacting, because S&P 500 holds so many tech stocks. So if the Nasdaq is having a death cross and everything's selling off, it only makes sense that the S&P 500 will follow suit because of the top 10 holdings. So that's SPY for you. Now, if I am looking to the downside, I mean, I would feel a lot more comfortable if we just all of a sudden went down to 410 and then we saw a gap up, just like with this right here, this movement. Now, if I see that, I would feel much more comfortable. But right now, we're still in this downtrend. I know we had a green day and everything looked bullish today, but I'm still not fully buying it. I would start feeling more bullish if we get above the 20-day moving average and we close above it. That is when I would probably not be looking to short the market because that's where I think it gets a lot more risky to short the market because we have some gaps that still need to be filled. They're all the way up here. And if we look right here, I mean, we got to fill this gap too. So, and that gap is right around 435. So that could happen. If that does happen, then this will just look like a massive cup. So you got to watch out for that. If you're shorting this market at these levels, you got to be pretty careful. I mean, it wouldn't hurt to maybe have one put just in the back of your pocket in case anything crazy happens. But other than that, I would be pretty risk off, and I wouldn't be touching options too much. But even at these levels, I think it's still pretty investable for ETFs. I wouldn't get in individual names at this point. Now with gold, I want to note that gold has a doji. So a doji is basically when you see a candle like this, where it's neither really up or down, and it's just kind of in the middle. You call this like a indecision candle. So you don't really know where we're going next. But I did see a hint right here. You can see that from this doji that we had, we tried to get up to the 20-day moving average, but we rejected. But what makes me nervous, and I mean, this is kind of like the trickery of the market, is that we have this gap right here that could get filled. It's right at like 182. And at the same time, we didn't break underneath the support, which is right here around 170, 178-ish, 178, like 61. So you can see here that it kind of held up as support. We didn't break under that, and we printed a doji, and we rejected the 20-day. And we have this gap up here. So, I really don't know where gold is going, but just the rejection of the 20-day and the doji kind of makes me think that we could fall before we gap up. And maybe we don't even fill this gap. Who knows? Not all gaps have to get filled. And when I look at the volume profile, you saw so much volume over here, and you're just not seeing as much selling volume. So the buying was so much stronger in these last few candles. The selling is so much weaker. So hard to say. It's really hard to say. With the NASDAQ, I mean, I'm not seeing too much here. Nothing crazy. I just kind of see us floating around. I mean, we could hit the top trend. So we could go all the way up to like 337 potentially, which is actually quite a big move. And let me see what that actually lines up with. So yeah, that will line up with this bar right here that we made on the 7th. So we could see a quick move up here, or we could just fall down to the bottom of this trend channel. So right here is kind of like the in-between. There's definitely more upside when we zoom out. And if we do look at this in terms of like a head and shoulders, then we did pretty much close right here. So you can see that's the left shoulder, that's the head, that's the right shoulder. But we could even go as far as closing the right shoulder down here at around 296. That could potentially happen. But who knows? Right now, it's still just kind of hanging out here in the air. And you can see we did do like a double bottom, triple bottom almost. Yeah, so something close to a triple bottom we basically did. So I would definitely look out for a break to the upside above the 20-day moving average. That would be an indicator to me to stop shorting tech and just kind of wait and see what happens, because that's where you're going to see a lot of chop going on. And we're going to want to start seeing higher lows and higher highs from this point on. Now, if we look at the VIX recently broke trend. If we're paying attention to this trend line right here, which is basically since February, we broke trend. But if we're paying attention to this trend line right here, then we basically bounced off. And now you kind of see that we had this day where we actually bounced back and forth these two trend lines. So, the VIX is kind of doing some crazy stuff here. And for me to really start feeling a little bit better about this, I would want to see VIX break underneath this trend line as well. And I do want to point out that we closed underneath the 20-day on the VIX. So that's 30.34. And you can see we've been holding this 20-day pretty darn well. So over here, we fell below it, but then you can see we closed above. Over here, you see that we touched it and then we bounced back. And yeah, the last time we actually went underneath the 20-day moving average was back here in the middle of February. So it's been above the 20 for quite some time. And today it just broke under. So also, kind of hard to tell. I mean, we're seeing a lot of crazy things in this market. So for me to get more bullish, like I said, I would want to see this break underneath. I would want to see gold also break underneath. Let's see, where is it? I would want to see gold break underneath here. But even before that, I would feel better if gold filled this gap and then broke underneath. And then lastly, I want to point out Amazon. So Amazon has this gap, and I'm going to point it out right here. There's a pretty big gap right here at around 2.8 thousand. So for me to feel a little bit better, I would want to see Amazon break down and actually close this gap before we see a move up. Because right now, I mean, Amazon has the potential to fall $150, and that's a lot. That could definitely put a dent in the Nasdaq and the SPY. So I would want to see Amazon close this gap right here, and then basically it'll fall in line with the February 24 price action, and then we could bounce up. So yeah, all in all, I just didn't see a whole lot of volume today, and things were definitely looking bullish today, but the volume just wasn't there, and I guess we'll just wait and see what happens tomorrow. But I hope you guys found this video helpful, and stay safe out there.